I will say that it is fair to remark that Greece over the past 7 years now has done significant progress. This, of course, is evident in the fiscal performance. Greek public debt has been declining by a rate which is really a record rate by European standards. Of course, we have very strong fiscal performance in terms of the balance, Greece is one of the 5 EU countries that records a headline surplus, which shows the structural strengthening of Greek public finances. But beyond the fiscal performance, there is also significant progress in terms of macro balance and living standards. I would highlight the reduction in unemployment as probably the biggest achievement over the last 7 years. Growth is more or less double the European Union average, and disposable income, despite the strong inflationary shocks that we have experienced over the past few years, disposable income in real terms has been growing. The question is whether Greece can continue on this trajectory. And I would say that the answer is yes. And this is basically the discussion about the structure of the Greek economy, a topic about which we frequently exchange with the good colleagues here. Briefly, I would say that the foundations for continuing this growth is much stronger than in the past, without, of course, saying that there is no scope about accelerating and strengthening further. So I would say that in terms of the foundations, the financial landscape has been also improved significantly. On the micro side, competition conditions have been strengthened. The labor market and the goods market is much more flexible. Greece is a much more open economy than it used to be in the past, and this integrates it much better with the European business cycle. I would like to highlight a couple of things which are often underplayed in Greek public discourse. The evidence of rebalancing of the economy towards scaling up. If you have a look at statistics about gross value added, you will see that unlike the period before the crisis, now the majority of gross value added in Greece is produced by firms which are in the scaling up category, that is to say, medium and large enterprises. There is also rebalancing in favor of higher value-added activities. So I would highlight here the significant increase in the proportion of manufacturing and the growth of manufacturing in Greece, which has increased by 20% plus versus more or less stagnation in the European Union over the past few years. And I would also like to point the development of a dynamic electricity sector, which has transformed Greece into a net electricity exporter. And if there isn't, here I will end my first remarks, a quantitative proof which basically depicts the progress of the Greek economy, is the upgrade in the estimates about long-term growth. Our good friends at the IMF back in 2019 were estimating that the Greek long-term growth was 0.9%, below 1%. In the 2025 Article 4 report, they find that the Greek medium-term growth rate is 1.5%. Now, one may ask, well, is this 0.6% differential a big deal? The answer is yes, it is a big deal, because over 10 years, this results into a bigger economy by 7 percentage points. And I would like to recall that the Bank of Greece independently estimated that the impact of the RRF in the Greek economy would be a 7% bigger economy over 7 years. So our friends from the IMF basically provide good evidence that the RRF plan of Greece is delivering as planned.